All right, good morning, everybody. It's like we are live across all the different platforms. Let me take a quick look at the trading, at the economics numbers that are coming this week 7, 8, 9, 10, and 11. We've got CPI on Thursday. That's going to be big. And we have the Fed speaking on Wednesday at 2 p.m. That will be big. We got jobless claims on Thursday along with CPI. That will be big. And then finally, Friday in the morning, we're going to have PPI and then consumer sentiment. So Wednesday, Thursday, and Friday, all big economic numbers days. But today and tomorrow, the market will be moving primarily on all the tariff adjustments that are going on in the markets globally and how that inversely affects the U.S. stock market and growth in businesses and all the markets. So it will be interesting to keep watching and see how it plays out. What I'm going to be looking for is an ascribed bottom, which you can't know is the bottom until we've come out of it. So, but it's going to be a very important moment to allocate when we come out of it, and that could be 6 weeks from now. So we're going to take it slow. We're going to take it day by day until we have the patterns we're looking for, and they will come, and we'll know when the bottom is put in. But the bottom, we don't know that yet. Oh, excuse me. And what was I going to say here about them? Let's see. What I was going to say is that while the market is pulled back, so every time it keeps pulling back, keep gunpowder around to locate. We're down 24% off of highs in this correction in 44 days, 24% on the Qs, on the growth market, and we're down basically 20% on the S&P 500. So that's not the pandemic drop yet, which was 30%, 30.44%, but it certainly is on its way, and it's acting very strong. But one thing we can say is that the speed of this drop has actually been faster than the pandemic. The pandemic drop in 2020 was had more resilience to it. This drop has been much more of a straight sell-off. There's been very little relief. We had, this sort of bottom over here, and then 2 days out, and that turned out to be a fake and reflected off the 200 for more beating. What we're going to be looking for is something like this, where we come up and out and maybe even get a 6-point uptrend out of wherever we're hitting. At that point, somewhere here and perhaps a little bit here, some more maybe here. It depends on all the different signals that come. It's around those regions that we'll be able to start allocating again, and it's going to be then a bit of a slow takeoff, but still one of the greatest spots to get in is going to be over here in about 4 to 12 weeks, but probably 6 weeks from now, a month and a half. So that would be something like mid-May, around June, somewhere in there. and then it possibly another 6 months, possibly after 4th of July, that we might see this kind of pattern develop where we can have conviction. Basically, the whole, like the left side is just an absolute, just dropping so fast. We need to start to see the right side become constructive, the right side of this shape. And we don't even have a right side yet. We don't have a bottom to create a right side. When we were over here, maybe there was. Maybe that was the bottom, and so we start thinking about right side, but all we got was 2 days. So, and then we undercut those lows. So that didn't really become a right side. It just became continuation of the move since up here. And now we are opening up in 4 minutes here. Much lower over the weekend. Price has come down more. Prices have corrected more. And as you saw on Friday, that didn't matter. We had a huge drop here. Big gap in there. That didn't matter. And so, because a red day was put in. And so that could happen again today. But usually what happens is what people don't expect. So if everyone's like, "Oh man, I'm short in the market. This is incredible. Drop. What a short opportunity." Then the market's going to go up. So the market does whatever takes the most people's money from small, dumb money, and then moving up the totem pole up to smart, big money. That's just the way it goes. So you don't want to be the dumb money because you're not big money, because big money is big money. So all you can do is smarten up. There's really no other. You can't have big money. So the only thing you can really do to make sure you don't get taken is to smarten up. And the best way to do that is not to do jack shit and just educate yourself for years if you can. Minimum of 4 months, if not 10 months of just constant 24/7 trading and stock market and economics, finance, education. There's just so much to know, and you need to know as much as you can. It can never stop if you don't want to let it. You can just keep learning and learning and learning. What'd you say? Oh, good morning. And look, he said OMG. I couldn't tell that was a G. So anyway, and then the other thing I mentioned in the group was, don't feel bad if you got hit hard by this. This is so far these 3 days in a row like this, 3 days of drop. This is the biggest drop since 1987 as far as market drops go. So this is a once in almost 40-year drop. So yeah, I mean, if you got hit, don't don't be too hard on yourself about it. That's a rare hit, and it happens. It happens. Now, I happen to have my portfolio hedged throughout all of this, and so I should be, theoretically, I should be okay, but we'll see what happens when the market opens here. All right, market's opening in 30 seconds, and and the other thing is, there'll be opportunity as prices continue to correct like this. We'll have to find them. They're going to be here and there. But the real conviction is not going to come for weeks, probably a month and a half. So for now, stay in cash and stay smart. Here we go. Market's opening. All right, now I'm going to have to cut some things probably pretty quickly here at the open. I might give them, if they're bouncing, I might give them 5 minutes. But Palantir is one of them. If I'm getting any green bounce out of it, I'll let it go for 5 minutes, and then we'll see what the opening range is. The 5-minute opening range. All right, so Palantir is green there. Let's check Walmart. Walmart green at the open. These are things that I'm holding that I need to potentially cut. Okay, TKO is red at the open. That's not good. I'm just going to go ahead and cut TKO now. Right here, when the market is most liquid at the open here, is a good spot to be making your changes. Morning updates. Costco. I'm going to cut that. I'm going to let that go. I'm actually, yeah, okay, 160, yeah. It was at 125 for a second there. Max profit. But no, I'm going to cut it here. Okay. I'm out of Costco. I mean, there's really nothing doing well, so... wait, what was that? That wasn't Costco. What was that? Filled order. I guess it was Costco, so then why doesn't it show me as out? Maybe I only got one contract out. Yeah, this is a bit of a mix of things I see. Okay, yeah, I'm out of Costco now. Throw that into my positions. Now, what else we got on the cutting block here? Sprouts Farmers Market. See, it's bounced a little bit now. Palantir, and how's the market doing at the moment? Okay, Palantir is definitely bouncing. Probably will get, yep, it's underneath 100%. It's at 99% max profit now, negative 99. Let's take a look at the market. Yeah, the market's going to break a new low right now. So things are not holding up. And I'm out of Costco. Let's go to PPC. Right, that's just sort of holding. Walmart. I might need to get rid of that. All right, it's bouncing though. TKO. I already put an order in. Is it getting worse or better or the same? Actually, getting a little bit better. So what's up with the TKO? It's just probably the liquidity is very low. All right. Oh, what was that? I did get to fill in the TKO. Okay, great. SFM. SFM is at negative 95%. Chewy. Now, it looks like we have about 60% breadth in growth. But you do not really want to be putting money into the market right now, because overall we have 1,230 new lows this morning on the market, which is a lot, which is like a lot, and only 19 new highs. So this is just a really strong negative day on the market. So far. And you just want to be protecting your capital. Just preserve your cash, protect your capital. I'm going to go over into this other account and add some QQQ here while it's down. Like dollar cost averaging, but this is for an investment portfolio. So that's not a swing trade entry on the QQQ. That's just adding on the pullback dip in an investment account. So long as the market's going to keep falling, I have powder dry to be able to pick up some. Here's gold. Gold is still at over $3,000 an ounce, and the VIX is at 51. There's really nothing you can do in the market when the VIX is over 25. It opened at it hit 60 overnight, and it is here at 51 today. We haven't seen that level since the pandemic. Been just about darn near 5 years since we've seen that level, and then prior to that, 2015. So it's like every 5 years we break above 50 on the VIX. Yep, the market is still going down more, and I'm still looking to cut positions. Looks like Walmart is going to get on the chopping block. It looks like it's getting worse. Let me see. No, not really. But Sprouts Farmers Market, how you doing? See, those are a little bit more consumer staples, groceries. Chewy looks like it's not doing too well. It's okay too. It's holding. I mean, anything that's just holding, I'll give it a little bit of time. Looks like Hims I could probably get out of, but actually this is not even at negative 100% max profit, so it's okay. Now, let's see. Just open percent. Oh, there it is. Okay. The ones to really worry about from the open, the one is PPC. This is down the most since the market opened in the last few minutes. Okay. Yeah, so I'm going to drop this PPC position. I don't know if you have that, anybody, but I'm getting out of that. All right. And GRND. And not holding up too well from the open. Palantir is doing the best from the open. Let's see. GRND, what do I have here? I already have, okay, just profit targets. All right, so I'm going to liquidate out of that, because that's not doing good, and we are in the 8th minute off of the open now. Cancel all sells and flatten that position. So this is what you got to be doing if you have anything. Now, nice thing is I'm hedged, so I didn't lose any money, even though everything of mine is down. And in fact, I'm up a little bit. But it's not about making money. It's just about not losing money. It's knowing when to be protective. Yeah, the market is definitely selling off now, a bit harder. And let's take a look here. What else I want to get rid of? If I want to get rid of anything. I got rid of PPC. I got rid of GRND. It's Chewy, maybe. All right. So, that's the way the market's going to be for the next few weeks. And what my advice is, my educational advice is preserve your capital, be cash ready. Don't get in anything as if it's a bull market. It's not right now. Everything's being corrective. So there's no swing trade signals that are worth taking, because nothing's going to hold for more than a day or two. We've already seen that, and that's the way it goes during these corrections. Once the bottom's in, it'll be weeks from now, but this week could be a fine time to be searching through stocks to find what is having high relative strength. That means what's going up, what's holding, which charts look outstanding through all this correction. And that's what we're going to be just constantly looking at throughout the day, and I'll be letting you guys know of any potential opportunities. But I'm keeping a list, so we'll continue to monitor that list. Like, for example, let's just go through a few. We have O'Reilly Auto Parts. We're looking for, the earnings are soon, but we're looking for entry into that. Kroger, it's a grocery store. SFM, groceries. And what's the other grocery one? Well, you got Costco's doing okay too. Not as well as SFM. Casey, what is this? Casey's General Stores, probably Dollar General, doing a little bit more resilient. Yeah, Dollar General is doing super great. So that's sort of like recession bets. But that's not a great looking chart. So know the difference, right? We're not interested in stocks that aren't great looking charts. But I have that there because it's doing well. It's being resilient. Boston Scientific. Everything's hugely correcting. So what you want to try to find is what's not hugely correcting. See how everything has that strong. I mean, the charts, these are charts that look great, right? But they have these strong right side corrections. We're trying to find anything in there which actually looks like it doesn't have that. It has a nice soft right side. That one's a little bit better. That's TJX. These are all charts that I have on my lists here that have beautiful charts, and we just want to see them what's not been hammered too hard. That's really what we're looking for here. See, that one got hammered really hard. Coke's bouncing actually. Pepsi. No, that doesn't look good. I would just pulled that. That wasn't on my list. Colgate. Also not that great. All right, Fox was super good. How is it doing now? See, it got hammered. So everything is falling out of play. So this is what happens, is that now we're going to go into a cash waiting type of style. And we're going to just wait for the market to draw out a bottom and a recovery. We're going to wait for recovery. And we're going to wait till it's confirmed, and because they take time. Nothing's going to get away from you. Don't worry. It never does. Corrections of this size and this strength and magnitude start to create a recovery that you can clearly see. And it goes through 2 or 3 cycles as well. So it can be 1.5 to 5 months. Okay, we just want to remain in cash, play good defense, and wait until we can play offense. All right. That's the market update this morning. Have a good one, everybody, and I'll see you back in the group. All right, bye-bye now.